on the protagonist.
Alright, but today is the 13th of April, today being a Monday, and in relation to the economic calendar, we had no high impact news today. There's actually construction going on at the moment. I'm not sure if the banging would be heard in this video, but I actually gotta get some stuff done for today, so I can't afford to basically just wait until the banging stops. So we're gonna take a look at the one trade that I took today during the AM session. And yeah, as per usual, we're just going to jump into the higher time frames, get a grasp of what is going on. So this actually won't be a long video, thank God. Reason why being is because I had already done a weekly review. I posted one during the weekend, so there's not really much to go into. There's not really much to go into deep description in terms of what price action is doing. So where we left off with the weekly review was the fact that, okay, we had Friday deliver up towards buy side, and we had faded the previous month high like we had suspected. And what we wanted to see us do though was fade the previous month high and then return into our 0.2, 0.3% for that TGIF to fulfill that TGIF for this week's delivery. And what we end up taking a notice to is that Monday's opening, well, technically Sunday, but the candle of Monday, we end up gapping open inside of our 0.2, 0.3 and engaging with this daily imbalance that resides right here. And then we also engage with the previous month opening. So we have the previous month opening of March, and being projected out in time, we see the engagement with that, which resides inside of this imbalance here as well. So that's it for the daily time frame. And then when we jump on taking a look at the hour 4, so we end up seeing this is where Friday ended up closing, and then we have the 1800 opening on Sunday, and we have that gap open down towards sell side, and this is that deliverance into that daily imbalance, as well as the fact that not only is price action engaging with that daily imbalance, which would be this candle's low right here, we're also engaging with all of this built up liquidity. So all of this TLP that resides right here, price action is engaging with it. And now there's drilling. Okay. Okay, I just had to, okay. Okay, I just kind of waited until the drilling was over, but we take a notice of the fact that we come down, engage with this low, which would be the high of your respective daily BISI, as well as the fact that we're engaging with all of this sell side right here. And something to also take a notice of the fact we open here. We don't close under this. So price action opens here. We don't close under it. And then we have that deliverance to close back inside of this imbalance. So we're still seeing the signatures being presented to us of this imbalance being utilized as support. And that is what gives us this buy side delivery motion to, well, we haven't yet engaged with the previous day high or the previous month high, but that is where we are currently drawing towards at this current point in time. And then jumping in and taking a look at the hour 1 time frame, there really wasn't much in regards to the hour 1. What I was paying attention to is the fact that this candle right here is our midnight opening. And what we end up taking a notice to is that this midnight candle, it opens and then we immediately have this deliverance up towards buy side. And coming into the day's session, I was looking to see if maybe shorts could present themselves. I wasn't opposed to taking shorts. Yes, we had just delivered into a daily imbalance and we were seeing that buy side delivery motion from that daily imbalance. But if the framework presented itself for a short position, I wouldn't have been opposed to taking it. Reason why being is because I would have looked to trade towards this midnight opening. The only reason why this idea isn't the strongest of ideas is because what we take a notice to is that, okay, midnight opens, we have that deliverance instantaneously towards buy side. But when we take a closer look at to what the midnight candle done, we ended up having this engagement with this imbalance right here. And we know that this imbalance is coming from the engagement with the daily BISI. So we end up having midnight very shallow, very shallow engagement with this imbalance, and then we have that deliverance up towards buy side. And then I have a standard deviation, so from this candle's low, so literally from the midnight candle, so this candle projecting it from its low to its high, that is what I had a projection out in price for. So we have our -2, -2.5, and our -4, -4.5. And in relation to shorts, where would I have been looking to see shorts end up occurring at? It would have been at the mean threshold of this bullish order block that was on the left side of the curve, because what we take notice to is the fact that we end up having this 7 a.m. candle and it ends up falling short of engaging with that mean threshold, and our -2 and -2.5 is in alignment with it. And I was looking to see if potentially a cracking correlation would present itself at this high at our 9:30 opening and then invite that sell side delivery motion. It's a lot more clear when we drop down in time frames, but we end up seeing that -4, -4.5 projecting just under the new week opening gap high, and very clean price action. We end up, actually no, we'll just see it on the 15 minutes. So yeah, that is quite literally it for the hour one. So taking a look at the 15-minute chart, so we have this 1800 opening, and then we have this deliverance up towards buy side, and then we have a consolidation occurring around Asia as per usual, and then you see that midnight opening, and then we have that deliverance down towards sell side, engaging with these two devil's marks right here, engaging with this M15 imbalance, and this is also where our one imbalance resides as well. And then we have that very lethargic and slow delivery up towards buy side, and this is something that I taken notice of going into the session, because I took a notice of the fact that, okay, we have this true day opening right here, and it's immediate deliverance up towards buy side, but this deliverance is very high resistance. And what we end up seeing is that 645, we have this deliverance up towards buy side, engaging with our equilibrium of the, well, this would technically be the consequent encroachment if we were trying to be technical, but the consequent encroachment with your new week opening gap, or midpoint, honestly just midpoint, we end up engaging with the midpoint of our new week opening gap, and we see that this is in alignment with our -2, -2.5 standard deviation, and this standard deviation is projected. It's our midnight opening leg, so from this candle's low all the way up to this candle's high. Now when it comes to these standard deviations, I mentioned in, I don't know if it was an analysis or a review, but there's a lot of ways to anchor a standard deviation. And in relation to my model and how I'm looking to engage with price, when I'm looking to click a buy or sell button, I want to have a standard deviation. A standard deviation needs to be there for me in order to project that move out in price. Now, those standard deviations that I'm doing, since I'm always located at a point of inception will essentially just be the reversal point. Those are projecting the market maker model. This standard deviation, what we take, and with those standard deviations, it requires a change in stay in delivery. So I need to see a series of up close candles and a series of down close candles. This standard deviation is not projecting a market maker model. What this standard deviation is actually doing is projecting our midnight opening candle. So this is, we're referencing IPDA here with this standard deviation, and these are your time-based standard deviations, and these are very, very good standard deviations. You have your Asia standard deviation projection, you have your midnight opening standard deviation projection, and then you also have your London standard deviation projection, which is very effective. All of them are very effective. And then you also have your New York AM standard deviation projection, and then you also have your New York PM standard deviation projection. Now, there's a difference between everything I've just said in relation to those standard deviations, and the difference is the fact that every one of those I mentioned is a session other than midnight opening. Midnight opening is not a session, it is a key time opening. And this is another way that we can utilize key time openings as well, anchoring standard deviations to the legs of our key time openings, and especially when they do something of importance. When they do something of importance, it's very, very valuable information to have in your chart in relation to that standard deviation projection. So in relation to time, you would have your midnight opening, and then you have your 8:30, and then you have your 9:30, and then you have your 10. Those would be the four that I look at very intensively in terms of, okay, is there a standard deviation that I can utilize in relation to time? This is where time and price comes in to alignment. And when it comes to the niche of trading in which I operate in, because trading is a very, very large scale business in terms of a lot of people do it. Not everyone is trading ICT. Not everyone is utilizing the same concepts that we are utilizing on the charts right now. Trading is a very, very large scale business, but within this niche, within this corner, within this realm of looking at price action through this lens, it operates off of time and price, time and price, time and price, time and price. But time and price is a lot more than just our sessions and our macros. What I have just explained in relation to our key time opening standard deviations is another alignment of time and price. I've always stated that you are looking for time and price to be in alignment. They need to be in alignment. And when I have mentioned that, I am talking about when we are observing our macros and we want price to be showing us our signatures that for a reversal sequence during our macros, during our key windows. This is when time and price come into alignment. We also have time and price coming into alignment with the segment of price action that we're looking at right here with this standard deviation that we have projected out in price. Midnight opening, there's a sufficient leg that we can use to project. This is alignment. Another piece of alignment that we have in relation to time and price, simply still on this 15-minute chart, would be our new week opening gap. What we end up taking notice to is that where my long execution was on this 945 candle. And this is the very start of that 30-minute window that we're looking to see reversal sequences initiate. But what we take notice to is the fact that price action ends up opening right here, delivering down, engaging with this 15-minute order block, which was already engaged with, but we engage with this 15-minute order block. But more importantly, what we are engaging with is the consequent encroachment of our new week opening gap. That is the importance of what we are doing right here, engaging with the consequent encroachment of our new week opening gap. And a new week opening gap is not just an ordinary PD array, it's a time-based PD array. It will always be a time-based PD array. Now, I have touched on these in some of my analysis videos in terms of a PD array simply just being a PD array, and then you have a time-based PD array in terms of midnight opening on our hour one chart being an order block. So the order block is your midnight opening. That would be a time-based PD array. New week opening gaps, new day opening gaps, and opening range gaps are time-based PD arrays. They are created off of time, because with this new week opening gap, it's created with the fact that we close here at 16:45 on Friday and we open here at 1800 on the Sunday. So we have that deliverance under our consequent encroachment of our new week opening gap, as well as re-engaging with this order block, 15-minute order block that resides right here. And what I actually have here is the utilization of a body standard deviation. Once again, like I had mentioned in the review that I posted over the weekend, there are times when when you anchor a standard deviation and it's simply just too over exaggerated. What can we do? We look to utilize a body standard deviation. And what do we anchor it to? We anchor it to the manipulation leg. So in this case, I'm deeming these series of down close candles the manipulation leg. I do have a wick standard deviation, which is the red standard deviation, and we see that once again, -4, -4.5 is inside of our -2, -2.5, the same way this occurred in the review that I was doing over the weekend, that I posted over the weekend. This is not random, it is simply just algorithmic. So we have our -2, -2.5 of a body standard deviation, and what do we take a notice to? Where does this standard deviation project? It projects for the high of our new week opening gap. And look what price action does. Right at 10 a.m., we engage with it, and then we have this deliverance down towards sell side, engaging with the upper quadrant of our new week opening gap, and then we have this deliverance back up towards buy side. Beautiful. This is very, very clean delivery, like very, very clean delivery for our New York AM session. I don't know about London. Yeah, London was very poor. London is ugly. Asia actually wasn't actually all that bad. We have deliverance up towards buy side, but then we end up slipping into a phase of consolidation. London, very poor. New York AM, pre-New York AM, clean, beautiful, beautiful price action, to be quite honest. So that is, I haven't even gone into the trade, but I've basically talked about the trade here because the trade only elapsed for about 2 minutes. Yeah, so the trade literally only elapsed for about 2 minutes. We're in long on this candle, and then we're out of the position on this candle. And where we took our position out would have been in alignment with this standard deviation right here. So this -4, -4.5, simply looking to collapse the trade just right there. What we were looking for price action to draw towards would have been the previous settlement. This is a little bit messy. But we were looking for price action to deliver towards the previous settlement. Reason why being is because I like the alignment with the previous day's equilibrium. It's very clean. I like the alignment with it, as well as the fact that ahead of our 9:30 opening, we end up establishing a continuation right here. So we end up establishing a continuation. We have a reaccumulation of orders, and look at where we are having that reaccumulation of orders. And then we have a standard deviation that we can project out in price. We end up seeing our -2, -2.5, drilling again. We end up seeing our -2, -2.5, and this is where we have our reaccumulation of orders at that 9:30. We delivered down towards sell side, and we come back, reaccumulate orders inside of the first presented AM of Wednesday, and we leave this low intact as we're deeming this low protected, and then we have that buy side delivery motion to end up engaging with our previous settlement and equilibrium that resides right here. And then with this deliverance up towards buy side, we have the high that is presented right here. And where this high is located, it's right at the high of our new week opening gap. Very beautiful, presented with a cracking correlation, change in sustained delivery. And I also have a standard deviation here. So it's a wick standard deviation, except it's over exaggerated. So what do we do here? We grab the bodies, and what we're going to take a notice to is the fact that we have our -2, -2.5 projecting for where we do have that reaccumulation of orders. And we know that this reaccumulation of orders that occurs right here is actually inside of our M15 gap that resides right here. So very, very clean price action altogether. And we end up seeing this candle, this 1023 candle. I'm actually getting a bit of interest in it. Reason why being is because we have this deliverance into the lower quadrant of today's opening range gap. So today's opening range gap, we have the previous settlement from Friday's closing right here, and then we also have the 9:30 opening. We have a quadrant layered out in price, so from this candle's opening all the way up to our previous settlement, and then we have the quadrants that reside right here. We have the consequent encroachment, and what we end up seeing is price action delivers down to the lower quadrant. But once again, this is where we just come and we say this is simply a little bit too algorithmic. It's not random. These things are quite literally not random. When we are paying attention to where our lower quadrant is, it's in the first presented fair value gap of the PM session. But not only is it just there, it aligns with the consequent encroachment. Oh, we just hit it. It aligns with the consequent encroachment of out. Okay, how do I get this? It aligns with the consequent encroachment of the first presented fair value gap from the PM session. That's not random. It's not random because this gets to a point where you quite literally have to say to yourself, you know what? There might just be a little something here. You know what I'm saying? Why? Because this fair value gap printed on Friday. It's been a solid 3 days since then, and no one knows where 9:30 is going to open for Monday's price action. At least I don't know where it's going to open, but it's opened here. And when we layer a quadrant out, once again, like I mentioned in the review, the use of a Fibonacci, when used correctly, is going to always align with the algorithm. A Fibonacci is mathematical. An algorithm is mathematical. It only makes sense that they speak the exact same language. But that is quite literally it for the execution video. Kind of went on a little tangent, making the video a bit longer than it should have been. But yeah, that is quite literally it. Trying to think if there's absolutely anything else, but there's not. I guess I can touch on the fact of, like, initially I was saying that where we could end up having some longs, and it would have been at this high right here. I was looking to see if price action was going to gravitate towards this high as it was, and I was looking to see if maybe we could have the engagement with this high, cracking correlation, because it aligned with the hour 1 standard deviation. Yes, so this is where that high is, that 7 a.m. high. Price action was gravitating towards it. So we had price action gravitating towards it just right here. I was looking to see if price action would engage with it, cracking correlation, and then we also engage with the mean threshold of this order block that resides right here, and then point of inception to deliver down towards sell side. And yeah, that was basically what I was looking for that short position. How come I didn't take it? Well, for one, we have the engagement with this high across both assets. So ES and NASDAQ ended up engaging with it. YM was moving a little bit donkey during today's session, but we have NQ and the ES both engaging with this high, and it's not just okay they both engage with it. The fashion in which we engage with it is we end up seeing an imbalance being printed through this high, and not only through that high but as well as the previous day's low. So essentially reclaiming that previous day's low for this segment of price action to deliver, because what we're in, like I mentioned, we're in this market maker buy model right here. It's a continuation. Price had been in a market maker buy model since here. We're continuing this market maker buy model after establishing a point of continuation, and we end up displacing through that previous day low, reclaiming it for this market maker buy model to then collapse at that -2, -2.5 for that reaccumulation of orders. So yeah, the idea simply just wasn't there. There was no structure behind it, and it's not as though we were within a time window or a key time opening had just arrived. Neither of those had came into place, so there was quite literally nothing for me to do. But yeah, that is quite literally it for today's execution.